You said something very interesting during the Schroeder's Media Day here in New York, and that is you are seeing interest from European investors in the muni space. Now that's quite unusual, isn't it?
Yeah, it's pretty unusual. The municipal market in the US is predominantly a retail market, and it's definitely a domestic market. What we're beginning to see is as investors realize that perhaps the credit strategies that have worked so well for them for the last 4 or 5 years are beginning to offer less value where they're going to go with that allocation. We've seen lots of volatility in emerging markets. High yields are not so high anymore, where the opportunity is, and we've seen now 2 European clients fund strategies in tax-exempt municipal bonds, trying to take advantage of the dislocations that we saw in the second half of 2013.
Even though they really can't take advantage of the tax-exempt status of muni bonds like domestic investors.
Yeah, exactly. But that's true of the majority of our portfolio. So even our US pension clients, our US endowment clients who have the 25% allocation, they're not taxpayers either. So it's interesting that investors are beginning to look at munis more from a total return perspective and less from a tax advantage perspective.
And would you expect that the interest grows from other clients in Europe?
I certainly hope so. I think that as spreads continue to narrow, people are looking for where the next opportunity is in the fixed income market, and it's not so obvious, so people are beginning to look further afield. And the interesting thing about the muni market is it's still a significant size market. It's not a little esoteric market. It's $1.7 trillion, major issuers, state of California, for example. It's not quite the old-fashioned muni market it once was.